Welcome back to our SSCMA classes, guys. So we are going to resume our international taxation classes. As I mentioned in the last session that we are going to solve at least one illustration. So here I am with two illustration. Okay, so let's do it in this session. Before that, please keep your calculator with you. Okay, let's go for it, guys. So double tax income and relief under section 91. Okay, the question says that X is Indian resident, age 21 years, earned a sum of rupees 10 lakh. Okay, during the previous year 2021 and 22, playing badminton matches in the country which India does not have double taxation agreement, which means this is a foreign income. 10 lakh is foreign income. And in foreign income, the resident have to pay, the SSC have to pay twice tax, double tax, right? So let's resume our question, which says that India doesn't have a double taxation agreement. Fact 2 lakh was levied on such income source of India, which means tax paid, tax paid. Tax paid in that foreign company is 2 lakh. Do you remember some provision of section 91? Do you remember? Let's go for it again, guys. But the law unilateral relief under section 91. Okay, countries with which no agreement exists. The question is saying this partner that India is having no DTA agreement with that specified country. Okay, when there is no relief taken on DTAA, income accrue or rise outside India, income is not deemed to accrue or rise in India. Okay, and SSC have paid tax. So there is this part, this part, this part, this part. Okay, let's go for it for the questions. So the foreign income is of 10 lakh, right? 2 lakh is the tax paid by SSC on that foreign country. Is it clear? Yes. In India, he earned 15 lakh rupees during the previous year 21-22 from playing badminton matches, and he has deposit 1 lakh in PPF during the year, which is deduction under section 80C public provident fund, right? Do you remember? Compute his income tax liability for assessment year 22 and 23 if he has not opted the provision of section 115 BAC. Now we have foreign income with us, right, which is of 10 lakh. Let's write it down. Foreign income of rupees 10 lakh, Indian income of rupees 15 lakh, and foreign tax which is of 2 lakh, and ATC deduction we have 1 lakh. We have 1 lakh. Is this part clear? So let's go for the computation of total income of X in amount in rupees. So we have Indian income 15 lakh, foreign income 10 lakh. So the gross total income is going to be 25 lakh. Is it clear? Yes, this part is clear. So let's go for the deduction under section 80C of public provident fund of 1 lakh. So we have total income of 24 lakh. Okay, now we have to compute tax on this total income of what? 24 lakh. Let's take out the tax. So on 24 lakh tax is 5 lakh 32,500, right? 5 lakh 32,500. Add HEC, health and education cess of 4%, which is going to be 21,300. Hope you are matching the amount with me. Okay, so the total tax would be 553,800. Is it visible? Hope so. This is visible. So we have total tax of 553,800. Till this we know everything, right? We know everything, and things come from here which we want to know of relief under section 91. Now what is this relief under section 91? How we have to compute it? Okay, relief under section 91 says that if your double income tax, double tax income and double tax income of Indian rate and of foreign rate, whichever is lower, whichever is lower, you are going to get that relief under section 91. Now what is this double tax income? How we have to compute the income rate of tax? This says, let me rewind it again. Relief under section 91 is to extent of lower of double tax income. Remember, double tax income was foreign income was of 10 lakh, foreign income was of 10 lakh. Is it clear? Yes, this part was clear. Now law says the SSC will get relief under section 91 to the excess of lower of the double tax income, which is 10 lakh, okay, into Indian rate of tax or into lower rate of tax, whichever is lower among them. Now I have to find out how to calculate this Indian rate of tax now. I don't know how to calculate Indian rate of tax now, so I'll go for it first. Calculation of Indian rate of tax. Total tax, let's go for total tax and total income. Total tax was 5,53,800. Okay, 5,53,800. This was the total tax. And what about the total income? Total income was this 24 lakh. Is it part clear? So we are going to calculate what Indian rate of tax. We have total tax of 553,800, right? And we have total income of 24 lakh. Let's take out 553,800 divide by 24 lakh into 100, will get 23.075. This is going to be our Indian rate of tax. Hope this was clear. Okay, now we are going for the foreign rate of tax. We are going to do the same thing. 2 lakh, do you remember? What is this 2 lakh? The foreign tax upon foreign income, right? Here in the Indian rate of tax we take the total income, right? But in case of foreign rate of tax, we are going to take the foreign tax paid, okay, upon my foreign income. So 2 lakh was given in the question, right? Everything is given in the question. Let's see it again. Foreign tax was of 2 lakh, right? Foreign income was of 10 lakh. So go for it. 2 lakh divided by 10 lakh into my 100 will get 20. What we get? The percentage is of 20. So whichever is lower among them, the lower part is 20. So the foreign rate of tax is lower among these two. So we'll take 20%. 20% of what? 20% of double tax income, which is foreign income. This is the income where SSC paid twice tax, right? So the double tax income would be 10 lakh into Indian rate was of 23.075 and 10 lakh into 20%. So which would be lower? Which is lower among them? 230750 or 2 lakh? Which is lower? 2 lakh for sure. 2 lakh is lower among them. So this is going to be our relief under section 91. Is this clear? So this is the relief. We have to deduct from the tax, total tax amount, okay, 553,800 less 2 lakh. So 353,800 will be tax payable. 353,800 will be tax payable. Is this part clear? Hope so this was clear. So this was the relief of, we get the relief of Mr. X get the relief of 2 lakh rupees, okay, and tax payable amount was of 353,800. Hope this part was clear to you. Okay, let's go for the next question. So this is relief under section 91 again, which says that if the person have no agreement with the foreign country, right? If our country is not having any agreement with foreign country, right? And the income have accrued or arise from outside India, not in India, okay, and the SSC have paid foreign tax in foreign country, okay, then only the relief under section 91 is to be benefit under this relief. This section is to be taken by whom? SEC. Is this part clear? Hope this part was clear. Now let's jump to the question. Okay, Arunima, an individual, resident, retired employee of Prakash Bharti, focus on the age 60. Okay, the tax slave would be different, okay, not for normal individual. Okay, 60 years, is well known dramatist, deriving income of 1,10,000 from the theatre world played abroad. So this is going to be foreign income, right, of Arunima. We are finding relief under section 91. Is this part clear? Yes. So foreign income is of what? 1,10,000. Yes. And she already paid tax in that foreign country, which is 11,000. Is this part clear? Foreign tax is of itna. Is it part clear? Was deducting in the country where she performed. Okay. Okay. Now, India does not have any double taxation avoidance agreement under section 90 of Income Tax Act with that country. Income in India's, okay, till then this part is also clear that the Arunima have some foreign income of 1,10,000. She already paid tax deduction, it shows on that foreign company of 11,000. Okay, and our country and that foreign country is not having any DTAA agreement. This part is super clear. Okay, let's go for the next part, which says that India amount, the Indian income of Arunima is 6,10,000. Okay, and she has deposit rupees 70,000 in PPF. Now these are the deduction. Okay, ATC of 70,000. Public Provident Fund comes in ATC. Okay. So 70,000, right? And paid contribution to approval ATCCC, I guess, of 32,000. And she also contributed 18,000 to the CG health scheme during the previous year. This is going to be ATD, I guess so. Let's see. Okay, and gave a payment of medical insurance premium of 31,000 to ensure the health of her father, a non-resident, age 76, who is not dependent on her. There is last deduction, and we have to focus on that thing, which says that the question is saying that she gave a payment of medical insurance premium of rupees 31,000, okay, to ensure the health of her father, and the father is not dependent on her. Is this part clear? Yes. Still the deduction is allowed. But what about the non-resident? Because her father is age of 76. Okay, once a person is more than 60, they'll get benefit up to 50,000, right, of ATC under section 80 ATD, right? But here comes a question that her father is a non-resident. Now we have to find out that whether her father is going to get that deduction under section ATD or not, or if he's going to get, I mean she is going to get her father's deduction, medical insurance and all. So how much amount is the maximum limit of this? Okay, because her father is a non-resident here. So let's go for the solution, which says that since India doesn't have any DTAA with that country, in which means Arunima performed her play, therefore she will be eligible for relief under section 91 of this act. Hope this part was clear. Now let's compute the liability. Indian income, yes, Indian income 6,10,000, yes, 6,10,000 is clear, yes, cleared. Foreign income, again foreign income of 1,10,000. Take out your calculator everybody. 6,10,000, 1 lakh, which is going to be 7,20,000. Gross total income is going to be 7,20,000. Now let's go for the deduction under section 80C. ATC was of PPF 70,000. Let's go for it. Oh, sorry. Let's go for it. We'll get 70,000 deduction under section 80C. Okay. What about deduction under section 80CCC, which was contribution of approval of PF? Yes, we'll also get that deduction of full 32,000. Now here comes the deductions limit. The deduction under section 80C, 80CCC, 80CCD is restricted to 1,50,000. Now check whether 70,000 and 32,000. They are 1,02,000. Are they exceeding the limit of 1,50,000? No. So we'll get the full amount of this. Okay. Now here comes the question that deduction under section 80D, right, where 18,000 contribution to CG which do not exceed the maximum limit of 50,000, which do not exceed the maximum limit of 50,000, as the Arunima is at the age of 60, so she'll get the deduction under section 80D of 50,000 of rupees 50,000. Is this clear? Yes. So what about the last deduction? Last deduction of, let's go for it again, of medical insurance premium of rupees 31,000 ensure the health of our father. Okay, a non-resident age of 76, non-resident at age of 76, 31,000 was the amount, and her father was a non-resident. Okay, so now we have to find out how much deduction, if she is going to get any deduction or not, and how much deduction is she going to get. Okay, so deduction under which also comes in 80D. Okay, medical insurance premium of rupees 31,000 paid to father whose age is 76 years is not entitled for the higher deduction of 50,000 as he is a non-resident, and deduction restricted to maximum 25,000. Okay, as here her father is a non-resident, and it is not going to matter whether he is dependent on her or not. Okay, so in this question her father age is of 76 and her father is a non-resident person. Just because of that, just because of this status that he is a non-resident, he'll get the maximum deduction of up to rupees 25,000, and the deduction this expenditure was of 31,000. So he'll only get the deduction of 25,000. Excess 6,000 is not entitled here. Okay, so let's go for it again, guys. We get the deduction under section 80C, which is PPF 70,000, deduction under section 80CCC, contribution approval of PF, which is 32,000. Okay, deduction under section 80D, which is contribution to CG which do not exceed maximum limit of rupees 50,000. Okay, 18,000. ठीक है, medical insurance premium of 31,000 which is not going to be get by this Arunima. Okay, so 25,000 is the maximum limit for this case. Okay, so let's take out calculator. Let's calculate the total deduction amount. 70,000, 32,000, 18,000, 25,000, which is 1,45,000, which is to be deducted from the gross total income. So we have total income of 575. Okay, 5,75,000 was the total income of Arunima. Now we have to calculate the relief. Oh, before that we have to go for the taxation, right? Income tax. So this was the total income of Arunima. We have to go for the tax. Okay, total tax computation, because as the basic exemption will be 3 lakh in this case, 3 lakh in this case, because she is of 60 years, right? So let's calculate. Take out your calculator first of all, everybody. So we are having the income tax on basic exemption up to 3 lakh is relieved. So we'll get 25,000 tax. Okay, on in that we are going to add 4% HEC, health and education cess, which is 25,000, 4% which is going to be 1,000, and we'll get total tax of 26,000. Now comes the relief under section 91 on which income, on this income, because this foreign income, on this foreign income Arunima paid twice tax, one on the resident country, one on the source country, right? Resident country from where she belonged, which means India, and the source country where the actual this amount, where the source of this amount was generated in that country. Okay, so the double tax income was of 1,10,000. Okay, so on 1,10,000, whichever is lower among Indian rate tax or foreign rate tax, we are going to get that relief. So let's go for it, guys. Total tax was of 26,000. Total tax was of 26,000. Total income was of 5,75,000. Total income was of 5,75,000. Is this part clear? So let's divide. We'll get the Indian rate of tax, that is going to be 4.52%. That is going to be 4.52%. Is this part clear? Hope this part was clear. Now let's go for the foreign rate of tax. Foreign rate of tax. In the question we have foreign tax and we have foreign income. Let's look at that. Just a second, guys. Let's look at the foreign tax, which is 11,000, right? And the foreign income is of 1,10,000. Again, we have to divide it. Foreign tax is divided by foreign income. So we have 10%. Okay, into 100. This is also into 100. Okay. So 10%. Okay. Now tell me whichever is lower among Indian rate and foreign rate. 4.52 is lower or 10% is lower? Of course 4.52 is lower. Okay. And we'll get on the double tax income, which is foreign income of 1,10,000. So we'll get 4972. Let's round off. Let's go for 4974. I've written it as 4974. Let's take it as that. Okay. 26,000 and 4974 would be like, we'll get tax payable amount of 21,030. Okay, we have actually rounded off. Okay, so the tax payable by Arunima was of 21,000. Hope so this part was clear to you. Okay, what we have to compute, first of all, earlier we have to compute the total income. Okay, from that total income we have to compute the total tax, then we have to add the HEC of 4%, right? Then we have to deduct the deduction like relief of 91. Okay, now what is that relief of section 91, which says that lower among what? Indian rate tax and foreign rate tax. Okay, so whichever is lower among that, we'll go for that, and which is to be multiplied by the double tax income, which is foreign income. Okay, where the SSC have paid tax twice. Okay, so that is going to be the relief under section 91, and the remaining amount is what? The tax payable by the SSC. Hope so this part was super clear to you. If not, comment below. Okay, I'll let you know with more illustration. Okay, till then guys, do the revision, solve as much questions you can. Till then, we'll meet again in our next session. This is Soumya Santosh. Hope you like the video. If you like the video, hit the like button, subscribe my channel and comment below. Okay, till then, we'll meet again.